Combining seller financing with an SBA loan can lower your out-of-pocket costs and make deals easier to close. Today I'm talking with Beau Eckstein. He's going to show us how it works. Hey Beau, how's it going?
Hey Bill, doing well.
All right, I have 3 questions for you.
Okay.
What is seller financing in the context of buying a business?
So in real estate, at least in a hot market, we hardly ever see seller financing. We would love to, but we don't. In business acquisition, oftentimes you are seeing a seller financing component. So you're buying a business for $1 million. You come in with 10%. That's $100,000. You're getting an SBA loan for $700,000, and then the seller's carrying back $200,000. That's very common. You can negotiate whatever term. So let's say your rate is your fully indexed rate right now on an SBA loan is 10%, and you really want lower payments, and you're paying the seller the price, and you're like, seller, look, I'm paying your price, but you're going to take $200,000 on a carryback, and instead of 10%, it's going to be 6%. So you can custom structure so you understand and lower and minimize your cash flow out of pocket as you're ramping up the business. The seller can also carry back a portion of the down payment, which is called on full standby. So if he or she agrees, they can carry up to 5% of the needed 10% equity injection, as long as there's no payments due for 10 years, the life of the loan. So if that's the case, you only have to, on that $1 million business, instead of coming in with 100, you only have to come in with 50,000. And they could have a secondary note, so the seller could do another note, and that could be not on full standby for $200,000 or whatever, and that could be at 5%, 6%, 4%. When you're structuring a deal, you're basically making sure it's going to cash flow, and it's a win-win for the seller. And a lot of times the seller doesn't want to pay tax on the full sales price from day one, so they're more likely to do an installment where they're only paying tax on the first $500, and the carryback they're only paying on subsequent years, whatever's drawn out from that those installment payments. So there's a lot of ways to structure it, and it's more common than in real estate seller finance type of deals.
All right, so you talked a little bit about how you can bring in some of your own money, get an SBA loan for a portion, and then seller financing. Can you dig a little deeper on that and specifically talk about kind of like what's the strategy behind getting an SBA loan with a portion of the remainder financed by the seller?
Well, it's all numbers. So if the seller wants out and the business cash flows, you can do 90% financing. $1 million project, $900,000 SBA loan. But if the deal doesn't pencil out and the seller's like, look, I want my price, but I'm willing to carry back, make it work, then you as the buyer have to figure out, does it really make sense? Because deals over $250,000, they do third-party valuations, and we're going to go off of the lesser amount. So if it doesn't value out, we're only basing the loan on the valuation. So the valuation, you agree on $1 million, it values out at $800,000, and we're basing our loan off $800,000. Doesn't mean the seller can't carry back. And oftentimes it's for tax purposes that the seller agrees to it. Or it could be an employee that works for the seller who's buying the business, and they want to give them a favorable deal and better interest, a better blended payment. So if instead of paying 10% on the whole boat, the whole loan amount, they pay 10% on 500, 5% on the 200 seller carry, because they're trying to carve a win-win situation. Business gets sold, new buyer comes in, seller gets $500,000 today, and over time gets the other $200,000.
So I can see how this could, this makes the transaction more complex, but it also makes it more doable and more feasible. Can you boil down into like simple terms for like maybe a first-time business owner? What are the specific benefits of this seller financing structure along with SBA loans? What are the benefits for the buyer?
One is potentially getting a deal done, because we can make the deal work from an SBA standpoint that wouldn't work necessarily without the seller financing. Better payments for you as a buyer, meaning we're going to structure and maybe have a lower blended rate. Perhaps some of the money's on standby, or some of the carrybacks on standby, so there's no payments due on that for a set amount of time to make you to get you into the business, get it. You're taking over this business that you might not have experience with, and the seller's been doing it for 20 years. You might be losing customers, so you really want to insulate yourself. and build in enough working capital in the deal. Sometimes we have to build in more working capital. We can only fund X amount, so it only makes sense to do with the seller carry. So really, it's to help you in an advantageous way structure a deal that makes sense for you and the seller. That's really it. Like, does it make sense? The seller might not really care about being paid out because they already have a bunch of taxable events happening in their life, and they would rather do a bigger installment sale. But most of the time for the buyers, to really reduce the out-of-pocket and reduce the monthly debt payment.
All right, great. Thank you for answering those questions, Beau. If a listener or viewer wants to explore SBA loans combined with seller financing, what should they do next? What's their next step?
Simply go to bookwithbeau.com, schedule a call, bookwithbeau.com.
All right, thanks, Beau.
If you're a solopreneur or small business owner, listen closely. Business growth isn't about working harder. It's about building smarter systems. It's about automation. And that's exactly what Go High Level Player helps you do. Build your funnel, automate your follow-up, manage your team, all in one place. Click the link below, activate your trial, and see how much more efficient, automated, and profitable your business can be in just 30 days.
Hey guys, Beau Eckstein here. If you enjoyed what you saw, please subscribe to this channel. We talk all things financing. I've been in the lending industry for over 20 years, and I'm happy to answer your questions and provide great content.